Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're closing out options expiration coverage from the Nasdaq Felix options trading floor with Eric Balchunas. He's a senior ETF analyst over at Bloomberg Intelligence. Eric, it's great to have you back with me over at Felix. There's a lot to talk about today in your world of ETFs with the reclassification coming up at the close. What does that mean? What's happening there?
Right, so this is a big deal. This is, I believe, the biggest reclassification since 1999. So, as you know, a lot of companies aren't exactly doing something that clear for a sector. So GICS, did a reclassification so that a lot of the tech companies that we know, like Facebook and Google, among others,
Right.
are going to move to a new sector called communications, which is telecom with a new name, right?
Right.
And if you think about this, telecom had no assets, especially the ETFs, not that many names. It was sleepy, underperforming. Tech, as you know, is the stud, the star, the biggest ETF category. So you have a lot of superstars from the tech sector coming down into telecom, which is sort of like coming from the best team to the worst team, if it was a sports metaphor. And it's going to create more parity, I think, in the sectors. And if you want to use numbers here, 2.5 trillion worth of market cap is moving to telecom, which only had 500 billion. So it's going to grow by 5 times today, and it's a major deal. And the ETF that we're watching is XLC, which is the new Spider Communications ETF that is already has these new names.
Right.
One thing you should know about this sector and this ETF is that almost 40% roughly is just 2 names, Facebook and Google.
Right.
So it's going to be top heavy with these 2 names, but it is a completely different. It is not your grandfather's telecom anymore.
Right. Well, I wonder if it's more reflective of the economy that we're in today, right? So you have Facebook going over, you have Google going over, some discretionary names going over as well. Comcast and Disney reflecting
and Netflix.
Content and media, right? And Netflix. So the top 10 holdings in that new index represent 70% of it. So you're right when you're saying it is top heavy. 10 names compromising 70% of it. That's a lot.
Yeah, and 2 questions I get. Amazon is staying in consumer discretionary.
Right.
So people don't know, okay, well, how do I get my FANG exposure now? It's a little split up, but the XLC will give you 3 of the FANG names, but you won't get Amazon. That's in discretionary. If you consider Apple with the AA, that's still in tech. But I always tell people, if you want a FANG ETF, FDN is the one for you. That's the Internet ETF from First Trust, where the FANG names are literally like the top 5 holdings, or 4 rather. And I believe it's 30-40% FANG names. So that, to me, is the FANG ETF.
Or you could trade NDX options, and there you go.
Or just buy the stocks. Or just buy the stocks. Who knows?
Right. Or the Qs for that matter.
Yeah.
How is this going to impact ETF investors? Do I have to worry about my holdings at the close?
If you're long-term and you hold the S&P or broad market, it doesn't matter. This is just shifting things within your holdings anyway.
Right.
If you're a sector investor, this is a huge deal. And what really is interesting, we talked to some ETF strategists who do sector rotation. All their models are pretty much blown up now. They got to go do histories and recalibrate the histories. It's going to be a mess for them. For most regular people, I don't think it really matters.
I mean, look at telecom, for example. That was being used as a bond proxy at a 6% yield. It's going to come down to about 2%. So it makes a difference.
And I do think, and I have no way of knowing the future, but there could be some degree of irony that a lot of these names that have had such a nice run for 10 years now are coming down to this sector, and you think, oh, telecom's gotten lucky. But, it'd be interesting if it's the worst timing, where these stocks, now that they've had the run, they go to telecom, and we'll see what happens. But it's not like just moving to telecom is going to change anything.
Another huge story this week, of course, is the weed stocks.
Yeah.
I mean, I can't even imagine trading those for 5 minutes. The moves have just been massive this week. What are you looking at from an ETF perspective? Are we going to get weed ETFs?
Well, there is one, MJ, which is the ETF MG product. And look, it's pretty good. 70% of the holdings are directly linked to cannabis sales, so it's a good pure play type product. However, they just switched custodians because U.S. Bancorp, I don't think, was interested in holding something that's federally illegal still. And now they're using custodians, Wedbush, and their transfer agency is a computer share or something. Neither of these people have ever done anything on ETFs. So just note this, and there's been some talk about some issues with creations. Not that they're halted, but some issues operationally. So just buyer beware. However, it's up 60% in, I think, the last month and a half.
Right.
It's on fire. We in my little world here, we've been talking about the weed stocks and marijuana ETFs for a couple years. They seem to be a good long-term story. This is supposed to grow. It's like prohibition ending. The sales projections are amazing. But I think right now what you have is this sort of highly speculative Bitcoin-esque kind of frenzy. And that kind of, I think, takes away from the story here of this whole new industry opening up.
Right, because I mean, longer term, if you look at it from a fundamental perspective, as you had said, that's where the growth is clearly going to be. It's definitely going to be a growth sector for sure. Maybe a trade now if you can stomach it, but longer term, look for a little bit more clarity.
These Bitcoin, when crazes happen, it's usually always when the VIX is low. People are, it's kind of boring everywhere else, and they're looking for some action. If the VIX were doing anything interesting, this wouldn't be even probably a discussion. All
right, and to wrap it up here, ESG ETFs, they seem to be very popular in theory, understandably so, but you're not seeing the asset flows.
Yeah, this is a riddle that has perplexed the industry. ESG gets a lot of press. The surveys, everybody says, I want it, I want it, I want it. And then you look at the assets, they're not there. ESG ETFs have $6 billion. That's only 0.2% of all ETF assets. And they've been around 10 years. Big names like BlackRock issue them. We have something this week that could change it. Vanguard has entered this area. We know Vanguard's a huge deal. They're also coming in with a product that's going to be 12 basis points of a fee. Investors are cost obsessed. We have yet to see a real cheap ESG ETF. And so if the Vanguard product takes off, it'll probably start a fee war, and more flows, and off to the races ESG will be. If it doesn't, if this new Vanguard ETF doesn't get $1 billion or $2 billion in the next couple of years, ESG might have some serious problems. They just may not ever find an audience. So this Vanguard ETF, I think, give us a test for, because now we know, look, now you have your cheap product, you have your cheap, now we know it wasn't cost, will people bite on this?
All right. Well, thank you very much for joining us over at PhilX, and thank you for joining me throughout Options Expiration Friday. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.